Yo, what's going on, y'all? My name is Tez, and in today's video, as promised, I want to break down how you guys can trade the strat. If you are struggling with like supply and demand or trend lines or support and resistance and things like that, all strategies can work, but I feel like for me, it transformed my level of comprehension of what the market is doing. So I'm going to take a stab at explaining this in the most simplest and most valuable way possible. I am not the owner or creator of any of this. I want to give credit to Rob Smith, who is the creator. May God rest his soul. I also want to give credit to the people who learned from him prior. And along with credit to my mentors who I first learned it from. Shout out to my mom for first mentioning it to me a few years ago. Also shout out to K for teaching me it, and JR Greatness as well for further explaining it as well. So shout out to all these individuals. Feel free to check them out. They're amazing educators. But today I don't want you guys to have to put in any emails or phone numbers or anything. I just want it to be a raw, uncut video where you guys can learn a little bit about the strat and how to execute it. And hopefully one day, I can earn a follow from you, but you can also execute it at a high level. And, if you want further explanations and things like that, obviously I want you to follow me so I can just give you more game for free, because I think who wouldn't like that, right? So with that being said, let's jump into the charts. I wanted to make sure that I can explain this the best that I can. So what we're going to do is we're going to jump into TradingView, and I'm going to go ahead and delete all the lines, all the stuff. I'm going to even remove all of my indicators that I currently use, just so we can make this as simple as possible. All right, cool. So as of right now, we're just going to leave up the volume indicator and the strat assistant. So I'm going to break down what the strat is, how it works, and why it makes sense. But first, I do want to make sure that, I'll give you guys a disclaimer. I'm not, saying that you guys are going to get guaranteed results and all this stuff. I just want to make sure that you guys understand, do your own due diligence. However, I do want to make sure I give you high quality information. So I'm going to explain it the best that I can, but just want to throw out the disclaimer. I'm not guaranteeing any results or trading profits or anything like that. Okay. So first off, I want to tell you guys how I kind of got into this, right? So when I first got into the market, I was trying to learn trend lines. So back in 2020 is when I started doing long-term investing from scaling my brands and my businesses. I started to put money into the stock market around the time of COVID. And that's how I was able to scale like my net worth and things like that, right? Then in 2021, like middle of 2021, end of 2021, I decided to jump into day trading. And, I tried to binge watch all the YouTube videos. I bought the courses. I went into the Discord groups for signals and things like that, and ended up blowing over $20,000. And yet I still couldn't understand what was actually going on the charts. So I took a break from trading, came back to trading, took another break, came back. Long story short, I ended up moving over into supply and demand. And I felt like I wasn't getting as many setups, and they weren't really like making sense to me, right? So all these different strategies, granted they work, granted I might just be, I don't know, whatever, right? I didn't have the highest GPA or nothing like that. I'm not the smartest person. But with that being said, I came over to the strat, and when my mom was breaking it down, then I learned from K how it works. And then I start going down the rabbit hole of like, okay, I need to understand this to another level. So with this video, I hope to give you all of that perception of the strat in this one video. So I just wanted to explain how I came about it, and all the people that, obviously helped me. Now, with all of that being said, the strat is a way of trading, right? So number one, the strat is a way of understanding price action and time. So the very first thing I want you to think about when you come over to TradingView or you look at any chart, right here on the right side, you have the prices, and then at the bottom, you have time. So in trading, right, or any market where it involves, assets being traded back and forth, it's always based off price and time, right? Now, when you're reading the strat, right, a lot of people will be like, oh, you don't need these numbers, you don't need all these indicators. All I know is it works, right? And at the end of the day, when you understand it, I think it'll work for you, and I think this will be something that will completely transform your trading. So the very first thing is, again, understanding what the strat is. It is a way of reading candlesticks. So the problem that I used to have was understanding and comprehending what the market was doing. Well, now I can understand what the market is doing. And if you combine key levels with what the market is doing and what price action is doing, it'll make things easier, right? So the very first thing I want to explain to you guys is the anatomy of a candlestick first, right? So first off, before I explain the strat, right, and how it works and give you the full breakdown, you first need to understand a candlestick. Now, granted, if you guys already know a lot about this, feel free to just skip ahead. But I do want to explain this because it is very important when looking at the strat and reading candlesticks. So let's say we take this candlestick right here, right? This is a bullish candlestick. We all know that these things at the top and the bottom, these are your wicks, okay? This is the highest and the lowest point that price has been in that particular time interval, okay? When you're looking at a green candlestick, right, or a bullish candlestick, right, we know this is the body, right? So this is the body and this is the body. All bullish candlesticks open at the bottom and they close at the top. Okay, so it opened here, price came up, and it closed here. Obviously, it did a lot of different stuff in between it, but we all already understand that. When you're looking at a bearish candlestick now, right, we know we already have our wicks. It's the same for both, right? Both candlesticks, whether it's bullish or bearish. But we know on a bearish candlestick, we open at the top and we close at the bottom. So we closed lower, which is why it's a red candlestick, right? Price went down. So now that you understand the anatomy of a candlestick, right, now let's go ahead and turn on the Strat Assistant. So this is the indicator that you guys can turn on in TradingView. It is free, so you guys can check it out. If you come over here, you type in Strat Assistant. It's by Ricky Z. Carroll. Shout out to JR for putting me on to this indicator. I didn't realize so many people traded it, but this is the one that I personally use, okay? So let's start explaining the Strat and the candlesticks and all these numbers and colors and things like that, okay? So I think to make it the simplest, right, we'll start one by one, okay? So I'm gonna zoom in here so we can see it, okay? So the very first thing is a 1, right? So how do I wanna explain this? The best way to do this is, let's take me and you for example. My name is Dontez, but I go by Tez, right? So that's my name and my nickname. Well, when you're reading the Strat and when you're talking Strat talk, right, you need to understand the different nicknames and names. So that way, if someone says an inside bar or an outside bar, you know what that means. So I'm going to explain that to you right now. Okay. So this candlestick is called a 1 bar. That's its name, but its nickname is an inside bar, right? And the reason it's called inside bar is because notice how this candlestick, right here, this is the bottom of the wick. This is the top of this wick, right? It is inside the previous candle. So when you guys are reading the Strat, it is always based off the previous candle. And the one key thing I love about the Strat and just overall trading in general is you have to look left in order to understand how you move right. If you understand how price action was before, or if you understand certain levels before, 9 times out of 10, they'll react to these same levels later down the line when the price is moving to the right, when price is active, right? So shout out to Wall Street Trapper for, you know, that analogy. I really like this, so I want to give him credit, right? Now, this inside bar, right, is inside of this previous candle. So notice how this wick at the top and this wick at the bottom, this whole entire candle is being swallowed by this one, right? So that is the first thing you need to understand. When I say an inside bar, it is basically inside the previous candle. So every one of these candles that you see is being read based off the previous candle. Good? I think that one's fairly simple, right? So this is an inside bar. What does this mean though? This just basically means consolidation. It means choppiness. It means price action isn't in a direction. It isn't moving in a specific direction. It isn't like volatile, or it's not, you know, directional. So that's an inside bar. This is also known as an actionable signal. We'll talk about actionable signals later, but I just want to make sure I put that out there, okay? So we have 1s, right? And all 1s are the same. As long as it's inside the previous candle's high and low, right? It's a 1 bar. It's an inside bar. Nickname and name. Good. Next up, let's talk about 2s, okay? So these are 2s. So here's the thing you need to understand about a 2. Name of this candlestick is 2, and its nickname is a directional bar, right? Or, you know, if you want to flip-flop them, directional bar, a 2 is the name, right? Now there's 2 different types of 2s. There's a 2 up, and then there's a 2 down. So a 2 up, obviously, is a bullish candlestick, and then a 2 down is a bearish candlestick, and all of it is relative to the past candlestick. So when you read this candle, it is based off of this. When you read this candle, it is based off of this. So let's further explain this, right? So when you're reading these candlesticks, right, we understand that this candle opens at the bottom and it closes at the top. So the reason this is a directional candlestick is because bulls are currently in control. Buyers are in control. And when this candle opens, right, it opened and then it pushed above the previous candle's high and then it closed above it. So when this happens, it creates a 2 up. So let's take a look at the 2 down though, right? So this candle opens here, it pushed up a little bit, it came back down, and what ends up happening is it broke the low of this candlestick. So when it breaks the low of this candlestick, it now creates a 2 down. And then as long as it closes below this point, right, or below the open, right, this is a 2 down, okay? So these are directional candlesticks. This is showing you who is in control at that particular time, okay? So hopefully everything is making sense. If you need to rewind this, feel free to. But yes, this is a inside bar. Now we talked about 2 up and a 2 down. These are directional, so we know who's in control, right? And now let's move on to threes, okay? So let's actually zoom out, and a better example to show is, okay, let's take a look at this candlestick right here, okay? So this is a 3 bar, okay? So this candlestick is called an outside bar. Its name is an outside bar, right? But its nickname is a 3 bar. So whenever you hear people talking about this on the strat, or you know, all these different things on Twitter and things like that, this is the terminology, and this is why it's important for you to learn. So if you haven't already, take some notes. You probably want to watch this like 2 or 3 times just so everything makes sense, okay? So if we know the strat is based off of reading the past price action, the most recent candlestick, right? Well, then I know that this outside bar, the reason it's outside is because when this candle opened, it broke below the previous candle's low, and it broke above the previous candle's high. So it broke both sides, right? And this is why it's a 3 bar. Now, a 3 bar is showing volatility, right? It's showing that, hey, we broke one side and we came back to the opposite side of the previous candle, right? Showing strength, right? And we broke past it, okay? And this is a 3. So regardless of, you know, where it closes, right? So this is a 3 up, and you can notice this by the green outline around it. So the really cool thing is if I go ahead and turn this off, this is a bullish candlestick, but the purple, right? When you turn on the strat assistant, is kind of like being highlighted by the green. So we know this is a bullish 3, right? There are bearish 3s like this one where it has a red outline around it because it closed lower than the previous candle. All right. So again, like I said, if none of this makes sense, rewind it, right? But if everything is making sense, make sure you guys leave a retweet and leave a follow, okay? So now we understand 1s, 2s, and 3s. We know a 1 is an inside bar. It is inside the previous candle's high and low. We know a 2 up is when the candle breaks the previous candle's high. We know a 2 down is when we break below the previous candle's low and we close lower, right? So all of this stuff is based off where we broke above and where we're closing. And that's why I wanted to go over the candlestick anatomy of where candles open and close so you understand that, okay? Now, here is one of my favorite candlesticks, right? So we talked about 1s, 2s, and 3s. That is like the foundation. But now let's take it to the next level, right? There are something called failed 2s, right? And I'm going to explain this the best way I possibly know how. It is basically a bull or bear trap, okay? So the way you read this, right? So notice how I'm going to turn off the indicator again. So this candlestick is a bearish candlestick, right? This is a bearish candlestick. So, but when you turn on the strat assistant, it is green, right? The reason it's green and it has a red outline around it is because at one point in time, right? So we know that a bearish candlestick opens here and it closes lower, right? But in this particular candle, right, the candle opens right here. So we'll go ahead and mark this out. So we opened here and then we pushed up. So we pushed past the recent candle's high. And at one point in time, we were a 2 up. We were just green, right? Buyers were in control until sellers took back control, right? Making the candle close down here, which means it failed to stay higher, right? So when you look at a failed 2 up, just think of it as it failed to close higher. So basically, buyers were in control. They lost control. The bears kept control. That's the best way to think of a failed 2 up, right? It is when the candle opens, it breaks the previous candle's high, but it can't close above it, right? It can't maintain that atmosphere. So it falls back through because sellers took back control, or you know, buyers started liquidating, whichever one happens, right? And then the candlestick comes back down and it closes lower than where it opened. This is what makes it a failed 2 up, okay? Hopefully that makes sense. This is basically like spotting reversals, right? So the reason I love the strat is because it's giving you multiple different ways of reading the chart and understanding what price is really doing. Like, you know, back in the day when I was trying to learn all these different strategies and all this stuff, I didn't really comprehend what was going on. But when you learn the strat and you really truly like look at this and you reread it, and I'll go over some examples with you guys, you know, it makes so much sense why things happen around certain levels. Like, you know, if you're around previous day highs and you get a failed to up, that means you're rejecting that level, right? Previous day high, previous day low, those are key levels. Those are forms of support and resistance. So if you get a failed to up around a key level, right, this is showing that, hey, we broke above, but we couldn't maintain it, right? So 9 times out of 10, we're going to come back down. And this is how you're able to read. And when you're options trading or doing any other asset trading, right, this is how you can read what price is really doing. And I feel like this is one of the best ways to trade, in my personal opinion. Okay, so we talked about failed to up. Now let's talk about a failed to down. So this is now on the opposite end. It's the same exact thing. So let's see if we can find a failed to down. Okay, so this is a failed to down right here. All right, so let's take a look at this. So this is a failed to down, okay? So how does this work? So we know that if we turn the Strat Assistant off, right? We'll leave that on. If we turn the Strat Assistant off, this is actually a what? Bullish candlestick, right? This is a bullish candlestick. We opened at the bottom and we closed higher. That's how we know it's bullish. But when you are reading the Strat, okay, it is red with a green outline around it. Okay, now here's the thing. This candle, yes, it opened and closed higher, but there was more that went on. This candle opened, it broke the previous candle's low, right, showing that sellers were once in control, right? And then the buyers stepped back in at this level around 570.40. We stepped back in and we made the candle close higher than where it opened. And this is showing you that bulls took back strength, which is why the next candlestick is also green, pushing up, because bulls are in control. They stopped it from going lower, right? So we failed to go lower. We failed to close lower, right? Buyers step back in. They have control. Next candle opens. They keep the control, right? So these are your failed to ups and failed to downs, okay? You know, if you need me to further explain it, let me know. And if any of you watch this and you trade the strat and there's things that I'm missing or I could better explain, feel free to leave it down below in the comments to help another trader out there. Because at the end of the day, my goal is just to help someone who is trying to, you know, trade, okay? So now that we understand 1s, 2s, 3s, and 4s, we know that everything is based off the previous candle, right? We understand consolidation, we understand volatility, right? So we broke higher and then we went lower, which is showing us that bears are in control, right? This is an actionable signal. So let's start talking about actionable signals, okay? So an actionable signal is exactly what it sounds like. It is something that you see and you take action on, right? So for example, a 3, right? So I'll just give you guys my favorite actionable signals is a 3 bar or failed 2s. I either want to trade volatility or I want to trade a reversal, right? And, you know, for the most part, you know, this has been working really well for me personally. I don't know for everyone else, but it has worked pretty well for me, right? So what does it mean when you see a 3 bar and you're saying it's an actionable signal? Well, if we were, let's go to more recent times, right? Let's just come over here. So we're on QQQ right now, right? And this is a 3 bar, right? So we opened, we pushed higher, we broke the previous candle's low, and then we closed lower. This is a bearish 3, okay? So the way you understand that this is an actionable signal, right? This is volatility. We want to trade volatility, at least I do, right? I am a momentum trader. I want to trade where the volatility is at because that's where the move can happen. So what you're going to do is you're going to mark the high and the low of this candlestick like this, right? This is an actionable signal, meaning that I'm looking for something to happen after this candlestick. I take action on this particular candle. So the way it works is when this candle prints, the next one opens, and if it breaks lower, right, this is called a 3-2, right? This is called a 3-2 continuation. I'm going to give you guys like a strat cheat sheet. Shout out to Sarah Strat, Sniper. You know, there was a Twitter post that I don't know where it came from. I just know it was on Google and I really like it. And I think you can use it as well. And I think you'll find a lot of use of it, right? So basically the way it works is you mark out the high or low of an actionable signal, which is a 3 or a failed 2. A 1 is also 1, but I don't trade those as much anymore, right? Maybe in the beginning I was doing it a lot, but me personally, I like to trade 3s and fail 2s only. Just my personal preference. You'll build your own system as you go, okay? So you mark out the high, you mark out the low, right? And then when this candle breaks below, right, you take an entry, right? So let's say, QQQ, the market opens, we flush, this is a 3-bar, this is an actionable signal, right? So what I'm saying is, okay, I'm gonna mark out the high and the low. If we break above, I'll take calls or I'll take buys, or I'll go long on the market. If we break below, then I will short the market or I will buy puts, right? And this scenario would have worked out for you, okay? So this is called a 3-2. So the really cool thing about the strat is that they have these different combinations, and I get it, right? You're watching this video and you're like, bro, trading doesn't need to be this complicated, but I just think it's a level of comprehension, right? If you understand this and if someone explains this at least as easily as I am, hopefully I'm doing that, then you'll understand like, wow, this is game changing for me. And I think that I can execute this at a high level if I just practice and I get more reps in, right? So this is a 3-2 continuation. Now, a lot of times what will happen is when there is a directional candlestick like this, right? A lot of times what they'll do is they'll continue in that direction, right? So notice how you have a 3-2 and then it's followed by another 2 down and followed by another 2 down and followed by another 2 down and another 2 down. So had you taken your shorts or your puts at 569.79, right? And you just held it, well, this is probably, from 565.79 to about 558. Let's say you close, in one of these 2 candlesticks, right? Well, this is probably about 200-300% in the beginning of the day, depending on how far out of the money your contracts are, or depending where your contracts are. So from getting in here to catching this move, right? And the really cool thing is that this works on all time frames. So if we were to go up on a 1-hour time frame, look at this, right? You have a 3 down, right? And then you have a 2-2-2 continuation. So had you just been watching the chart and had you understood the strat and you understood, what happens with continuations, you would have been able to catch some of this move. Now, obviously on a higher time frame, there's less noise. So obviously there's going to be a lot of different price actions, price action going on in between, these candlesticks on lower time frames. But when I trade, I usually watch higher time frames so I don't get juked out of my trades, and I mark off key levels so I know when to get in and when to get out and when to take certain trades, okay? So let's talk about another actionable signal, right? A failed 2. Let's take a look at this. This is again on the 1-hour time frame. So an actionable signal is you take action, right? So granted, yes, a failed 2 down is an actionable signal. Had you taken calls above here, let's say the candle, you mark off the high and the low, and this, this candlestick opens here and it pushes up, and then let's say, it doesn't continue going in that direction. So here's the thing, nothing always works, right? There's things that work sometimes, and your level of execution and your risk to reward ratio is what will allow you to become successful over a period of time as you get more reps, right? So you did end up breaking higher, right? And you might have taken calls and you said, oh, well, this still paid you about $1. So you may have gotten like 30-40%, nothing too crazy, right? However, if you notice where we're at, right? Let's go ahead and mark out the high and the low of this candlestick. Well, one thing to notice is that we're around a key level. What do I mean by that, right? We're around a psychological number, which is 575. And normally around psychological levels or key levels, like I said, previous quarter highs, previous quarter lows, things like that, a lot of times you'll get actionable signals around these levels because remember, institutions make up the market, right? These huge candlesticks are institutions, right? So these are the people buying and selling at mass levels or with a bulk amount of money, right? So with that being said, right, you mark out the high and the low. And if I understand that institutions are making up majority of the moves, right, then I want to also understand that, hey, around a key level, they're going to be making moves because they know that retail traders are also going to be just taking trades around these levels as well, right? So this is a failed 2 up, right? Had you taken the break below the failed 2, which is an actionable signal, you would have had a 2-2 continuation. So we failed to go lower, we failed to go higher, and now who's really in control? The bears. And they proved it by taking control the rest of the day. Okay, let's go to another example. Okay, so had you been watching QQQ off the 1 hour on this day, right, you would have seen a failed 2 down off the 1 hour. So this is at 10 a.m. You mark out the high and the low. When the next candle opens, right? You take your calls and look what happens. And now here's the thing, it's not always this simple, it's not always going to be pretty, and I'm not saying that when you start looking at it like this, it's going to work out like this every time for you. No. I think when you understand risk to reward ratios, I think things will get a lot better for you. Okay, so this is overall the premise of the strat. This is how you read these candlesticks. You got ones, twos, and threes. Now let's move over to this cheat sheet right here. So we're going to go ahead and do that, and we'll open this up, right? So this is the strat combos cheat sheet. You guys can feel free to Google strat combos and you'll find it there. But this is all the different things that can happen. So a 1 bar, right? What happens with a 1 is that you can take the break of the high or the low of a 1 bar, right? So notice how, let's say we're looking at a 212 bullish reversal. See, so these are all the names of the combinations. These are all the different things that can happen with a candlestick. So a candlestick can only do 3 things. It can break above, it can break below, or it can consolidate. It's the same thing as the market. We can make higher highs and higher lows. We can make lower lows and lower highs, or we can make equal highs and equal lows. It's market structure, right? So when you're understanding the strat, you're understanding market structure as well as price action and, you know, time of when trading, right? Or time when you're seeing price action as well, right? So you have a 212 bullish continuation. So you have the recent candle, right? This is a 2 bar, this is a 2 up. And then you have a 1 bar. So the way it works is when this next candle opens after a 1 bar prints, you can take the break above it and you would target the recent candle's high, right? It will also work on the opposite end, right? So this is a 212 bullish reversal. Let's say this candlestick is bearish, right? It's a bearish candlestick. Then we consolidate, and then buyers take back control. So you would enter when this candle breaks above the 1, and then your target would be this 2 over here. Okay? This is a 312 bullish reversal. So this is a 3 bar down. We consolidate, and then the next candle opens. It breaks above the previous candle, which is a 1, and now you target the 3, the high of the 3. Okay? So there's a bunch of different combinations as well. So like 2-2 reversal, this is basically when a candlestick is bearish and then the next candle opens and it reverses. So the really cool thing about trading the strat as well, you can spot reversals, you can spot, you know, all these different things, you know, continuations, volatility moves, explosive moves. You can spot all of it based off these combinations. Me personally, what I would say is find like 2 or 3 of these that you really like and stick with them. So me, I've learned that I only like failed 2s and 3s. So I don't take 1, 2, 2s, or I don't take, you know, 2, 1, 2s. I don't take those, right? Because that's not a part of my trading plan. I stick with what works best for me personally. So in this cheat sheet, again, all of this works on all time frames. So let's say you go up to the 4-hour time frame, and let's say that you like to let's go ahead and remove all these drawings. You know, let's say that you are actually, you know what, let's go to an even higher time frame. Let's say that you are a day trader or a swing trader, right? You know what I'm saying? You can use this for swing trading. You can use this for, you know, any other case scenario, right? So this is a 2, 1, 2 reversal, right? So basically how it works is you will mark out the high and low here of this candlestick on the daily time frame, right? So you had, if we were to read this, right, you had a strong move higher. We followed up by a sell-off. We're starting to see some consolidation, right? So this is just a lower high in the grand scheme of things. So we've seen some drawdown, but this is just a lower high in the grand scheme of price action over a period of time, right, on higher time frames. And then when this, you mark out the candle, this candle opens, pushes up, you take calls or you take buys, and then you would target here. And then your next target would be in here, or you can use recent support of, you know, other wicks and things like that from other candlesticks. So yes, this is pretty much the strat. Another thing worth talking about as well that is very important is something called full time frame continuity. So when you're looking at the strat assistant, the really cool thing is it'll show the 30-minute, the hour, the 4-hour, the daily, week, month, and quarter. It'll show what color they are, right? So if I were to go to the week, that means we're bearish on the week, right? So you go to the weekly time frame and it's bearish. But if you're on lower time frames, the reason this helps you is because if you are in alignment with the higher time frames, 9 times out of 10, or I would say 8 times out of 10, price action will continue to follow suit with the higher time frames, right? So a lot of times I'll chart higher time frames, and then I will go down to the lower time frames, because if an actionable signal, right, let's just say, something that we do in my community a lot is, we'll use the 4 hour or the 6 hour or the 2 hour, right? Well, let's take a look at this. This is, this is the move that you could have caught for when Powell was speaking on Friday, right? So this is Friday. And if you looked at the 2 hour time frame, you have an actionable signal. It's a 3 bar. So we know that this candlestick right here, it opens at 10 a.m. So this is an 8 a.m. candle. This is a 10 a.m. candle. And notice how at 10 a.m., right, when the candle opens, we break above the 3. And now we have this super explosive move that paid a lot of people in my group, okay? So with that being said, these work across all time frames, whether it's the monthly, weekly, daily, 6 hour, 4 hour, 12 hour, 30 minute, 15 minute, 5 minute, it all works. It depends on, your ability to factor out the noise when you are on those lower time frames. But yeah, this is pretty much the strat. I really hope that this was able to help you. Full time frame continuity, when you guys are taking trades and all of them are green, it's like, hey, this thing is moving in my direction. It's not saying that you're not going to see some red candlesticks, but it's just basically saying you are in the right side of the trade. If they're all red, what I'm saying, you're on the right side of the trade. If you're in puts, if you're in calls, you're getting smoked. Just putting that out there. But yeah, so hopefully this explains 3s, 2s, failed 2s, and all these numbers on your chart. If you guys really like this video, make sure you guys leave a follow. One of the biggest things for me is there's no opt-ins or phone numbers or anything like that. So if you want to take this video and share it to your groups or whatever, feel free to. I'll probably throw it up on YouTube more than likely as well, just to help, other traders out there. Again, disclaimer, I'm not guaranteeing you any results or anything like that. Yeah, if you like more stuff like this, you want more educational game on trading and just being in the stock market, feel free to hit the follow button and make sure you guys leave a retweet so we can help another trader out there who's struggling with being in the market, because I truly believe it is a life-changing opportunity that anybody can take advantage of, regardless of skin color, religious beliefs, and whatever else is out there that could be different from another person. And I think that is life-changing. So hopefully I was able to provide you with some value. I know that this video is 31 minutes long, and I didn't want to do you any disjustice by making it something that's super compact and just straight to the point, but you still didn't understand. I just kind of wanted to make sure that I explain things to the best of my ability, and I really put my best foot forward with this free educational video. So with that being said, I hope I earned a follow. I hope I earned a subscribe if you're watching it on any other platform, and I hope you find value from it. If you could, let me know down below some feedback on how you like it, how it compares to what you're currently trading. Do you feel like it's easy? Do you feel like it's harder? And if you guys want continuation videos, because the thing is although I trade the strat, there are a fair amount of other things that I also incorporate into the strat as well. So if I were to turn on all of my indicators, I also trade smart money concepts. So hey, there's a fair value gap. Hey, there's an order block. Hey, there's VWAP right here, and then there's a key level. We got previous day highs. We got previous week lows. We broke above here. Blah 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 blah. All trading-ese. I know you might not understand. It's called trading-ese. That's what we call it in my group. And also, if you want to check out my group, just an opportunity. If you want to, feel free to click the link in my bio. But yeah, if you guys want more videos like this, let me know. Drop a follow so I know for sure. And yeah, my name is Tez. I hope you guys got some value out of this. I don't want anything from you, and I hope that you slaughter the market, because why not? Peace.